Welcome back, everyone, to Successful Stylist Academy podcast. I am your host and founder, Ambrosia Carey. Today, we're going to be hanging out with actually one of my clients, Katie Hamm, who is a mortgage broker. She is going to tell us all the things that we need to prepare ourselves for owning a home. As a hairstylist, I know that sometimes it's a little bit difficult in our industry to get that loan. So, Katie likes solving puzzles, whether it's helping a first time buyer figure out the home buying process or a savvy investor financing a dream home. She is experienced in coming up with creative solutions to a wide range of financial riddles. As a 12-year industry specialist, Katie loves to create long term financial plans that lead to her clients' healthy financial growth. Katie, thank you so much for hanging out with us and sharing your expertise with us. Welcome.
Thank you so much, Ambrosia. I'm so excited to be here and talk about one of my favorite subjects, which is homeownership.
I'm glad it's one of your favorite subjects because it's actually a very scary subject for most people who don't know very much about it. And it's kind of funny because I have to share this with you guys really quickly. Before, I had Katie on here, I was actually texting her some questions because I was like, well, wait a minute, I want to make sure I'm asking the right types of questions. And this is sad, you guys. I'm literally living in my third home now. Like I should know all these things, but it's confusing. There's just so much to it. And when this is not something that you are, if you don't know a lot about finances, if you don't know a lot about just the rules and regulations and just kind of like how the world of finance works, it can be really intimidating. So I'm just so grateful that you like talking about it, Katie. So, the first question that I actually think is going to be one of the most common questions or one of the biggest questions in our industry is that what are some of the common mistakes that you see happening when people apply for a loan?
Yeah, great question. I think one of probably the biggest mistake that I see is that people don't start soon enough. To your point, it can be a really intimidating process for a lot of people. And a lot of people just kind of assume that they are way farther away from being able to own a home than they actually are. And just because you apply for a loan or even just have a consultation with a mortgage lender does not mean that you are in any way obligated to buy a home, in the next couple of weeks or months or even a year. But starting that process earlier, starting that conversation as early as possible um, is beneficial because then you can set some really concrete goals for yourself in terms of what you need to do in the next however long it is before you apply and actually start purchasing a home. The other thing I would say, another mistake that I see is people going with maybe a friend or a friend of a friend who's in the mortgage business, or maybe they do it part time, or whatever the case may be, versus really seeking out and finding an expert who can hold your hand, walk you through that process, who has the patience and the expertise to go through that whole process from start to finish. I mean, I was kind of like chuckling, like, well, I have a friend and she does hair out of her garage and I'm sure it's great, but I go to you because you're the professional, you're the expert. And I get expert results because of that.
What a great analogy. Thank you so much for actually saying that because you're right. I mean, friends they get to be your friends. Keep them in that arena, but when it comes to the expert and knowing what exactly you need to do, don't put yourself in a position where you make assumptions or, Google something and you just think that it's going to apply to you. Everyone has options. Everyone has, and the more you know, the more you can make an educated decision, but at least get the information so that you can make an educated decision. So thank you for even saying that. So if we were to roll everything into, I guess, like maybe just some top tips that you can share, what would you advise people to do before they start even looking at a home? If we're talking about starting early on, like what would those top tips be for you?
So, yeah, great question. I think the top tip would be to have a conversation with a lender. Pick somebody or pick even a couple of people to almost interview. Talk to them about what their process is, how they're going to get you pre approved, and steps that you need to take before doing that pre approval application. A next tip would be to set a really realistic budget for yourself. Sometimes people come into conversations and really haven't thought through, how much am I going to be comfortable spending on a monthly basis on my housing? You know, you've been in a rental situation for a long time, perhaps, and there are pros and cons of home ownership versus renting. So, you know, when you rent and there's a leak in your bathroom or whatever, you call the landlord and they fix it. When you're a homeowner, of course, you fix that yourself. So there are definitely more expenses, but then you also get tax write offs and tax benefits. So I think the most important is just what is going to be comfortable for you to pay every month in terms of that monthly budget, and practice that budget. So let's say your rent right now is $1,200 and you think, okay, I'm comfortable going up to $1,800 a month for a house. Over the next couple of months, is it really easy for you to put that extra $600 into savings? Because if it's not, then right off the bat, that may be too high of a budget for you. So you should very comfortably be able to save that. Plus, you know, obviously regular savings towards retirement as well. After you're pre approved, the other really important partner in this whole process will be your realtor. And as a buyer, you don't actually pay your realtor directly. The seller pays your realtor to represent you as the buyer. So that's important to know. But it's also just really important to work with, again, another industry expert on the realtor side of things, somebody who has experience, who isn't just doing, you know, maybe one or two transactions a year as a kind of a part-time gig. So you want to make sure that your personalities jive, but that they can really provide the service to you that you're looking for. And then I would say also, when you're a first-time home buyer, especially, keep your mind open to what long-term possibilities real estate could provide to you. Um, I think that in this country, it's really hard to build wealth if you're not a business owner and you don't own real estate. Those are kind of the two paths to like a long-term nest egg. And so while a lot of hairstylists might be working on the self-employed side of things, you can also really diversify and grow your portfolio with real estate. And for a lot of people, that means getting into their first home. And maybe this isn't a dream home. Maybe they're thinking, I can't see myself here for more than a couple of years as families expand or whatever the case may be. But it might be a really great rental property for you down the line. So just kind of breaking in with that first home is really important. Then you can continue to save and have a property produce income for you if you decide you want to go that route, just leaving options open.
I love all these tips. This is wonderful. And especially that last piece we were talking about, diversifying your portfolio, because our industry, we take care of people on a constant basis. So we're in that mode of just keeping up with what's happening right now instead of thinking of the future. And unfortunately, in our industry, it's not as common to have retirement benefits, to have even talking about finance. So that's the reason why this missing piece is so important to us. And your knowledge is gold to us, hearing these types of things where setting out a budget and just talking with the right kind of people and finding someone to have that conversation with, and really taking a look at your budget and just having an honest conversation and figuring things out before you even start the searching process. So that way you can make those educated decisions, like what you're mentioning in the beginning, is immensely helpful. So thank you for passing that on. And I feel like that kind of segues us in right to the next question, because you actually were mentioning something about the pre-approval that would go in for that particular person, if you're self-employed. So what kind of advice do you have for the beauty professionals wanting to get that pre-approval for the loan?
Yeah, I start early. Share with a lender exactly what your income situation is. And a good lender is going to ask a lot of detailed questions, look at your tax returns. There are different ways of being qualified kind of based on how your income structure is. If you're self-employed, like if you're filing on a Schedule C, or maybe you have a partnership or even a corporation, most of the time you're going to need to show 2 full years of tax returns and then be kind of in your third year before you can get qualified using that income. Now, there are some circumstances where we can go less than that, but for example, that would mean that right now I'm asking people for 2019 and 2020 tax returns, and then year to date for 2021. So I don't want to discourage anyone from applying or starting to have that conversation if they're not quite at that 2 year mark of self employment, because it could just mean that your taxes are more advantageous towards qualifying for a loan down the line. It's a little bit different for people who receive W-2s. We can count that W-2 income. I guess the bottom line is if the IRS doesn't see it as income, if they can't tax you on it, usually I can't use it as income towards qualification. So sometimes that means like a year of strategic tax filings where maybe you don't take quite as many write-offs, so that we can use that income for qualification.
Yeah, I know more stashing that cash, guys. Like sometimes, I mean, I've worked with hairstylists, especially on the coaching end, who they don't, claim part of their income because they are receiving so much cash. And, I know this wasn't part of the questions I was going to ask you initially, but since we're on the subject of income, is there kind of like well, I know that you're not a CPA, so I'm curious if you can even answer this or not, but is there a certain amount that advise people to, I guess, start claiming slowly if they were to want to get qualified? Because I know that if you, 1 year you're not claiming any of your tips at all, and then the next year you're claiming all of them, that could actually flag the IRS as well. So, do you give any advice to professionals who are not claiming their full income and they're trying to get that loan?
Well, so I'm not a CPA. I can't give tax advice. I think that is another person who you may want to bring into your own personal conversation in terms of that. For on our side of things, it's not a red flag to have income go up. I mean, that's definitely something that is looked upon positively, on a mortgage qualification. And really, the amount of income is going to depend on the budget, depend on the price of the home, depend on how much you're putting down, and again, that monthly budget as well. So typically, I can take the gross amount of income, and we want 50%, sometimes as low as 43%. So in that 43 to 50% range of your gross income going towards your mortgage payment, which includes your taxes and your insurance and paying back the loan and mortgage insurance if that's applicable, minimum payments on credit cards and car loans, and student loans as well. Which is, I guess, another point is keep credit card balances as low as possible. Pay those suckers off. They are not going to do you any favors in terms of like the high interest that they charge. So if you can get into a situation where you're actively making a dent in debt, if you have it already, or using the credit cards on a monthly basis, an amount that you can pay off to keep your credit score high and healthy, that's another important step.
That comes full circle because we've had financial gurus in the past that have shared that with us, and just getting your credit score high, keeping your debt low. We all know that credit cards gouge you when it comes to interest anyway. So getting that off, it helps immensely. It helps you keep the money that you make. Okay, cool. So if we're like walking through this journey, like you're telling all of us how to get that pre-approval, the steps that we need to make in order just to make sure we get all of our T's crossed and our I's dotted. I almost said that backwards. What happens if someone doesn't have enough money to put down on the home that they want?
There are a lot of options, down payment options. You you had mentioned earlier, like don't do Dr. Google for mortgages. I would highly recommend staying away from just kind of like blanket statements that you see online, because you will see online people saying you have to have 20% down, and it's just not the case. We have loan programs that require 3% down, 5% down, 10% down. And sometimes, even on those really low down payment, depending on where the home is, depending on income levels and so forth, there are even grants that you can apply for. And a good lender will know about grants and down payment assistance that's available, and kind of start with like a really broad picture and then narrow it down based on your individual circumstance. The other thing that people don't realize is sometimes there are family members who are willing to give gifts. And everyone's individual situation is different, but we do see a lot of gifts of down payment. And when you're talking about 3%, it's not like, hey grandma, can you lend me $500,000? It can be like a more reasonable amount to get you into a home. Sometimes people take out 401k loans, which, you'll want to talk to your financial planner about that, but that doesn't involve bringing your money off of the market. You're just kind of doing a loan to yourself, essentially. For people who do have 401ks, and I realize a lot of self-employed folks don't. But that's an important conversation to have with your lender. What are some ideas? How can I get to that minimum down payment so that I can start home shopping?
Awesome. I love that you said don't don't ask grandma for $500,000. That's amazing. Like come full circle, like, oh, just when you think you're done raising kids, oh, here I am.
Surprise.
Surprise. So now that we understand that if we don't have the money equipped at the moment, that we can actually reach out to people and get that gift, or that you can actually help us come up with ideas on creatively coming up with that money. What are some of the factors that affect that interest rate and what, our actual payment will be?
Yeah, great question. So let's talk about interest rate first. So interest rate is primarily driven by financial markets. For a long time, people have had really specific ways of I guess, quote unquote, predicting what interest rates are going to do. Last year, COVID threw a wrench into that. Interest rates dropped in a way that we never expected. We are expecting to be in a rising interest rate market over the next few years. Things could change on that, but we are really, really close to historically low levels right now. And interest rate makes a huge difference in terms of what you can qualify for and what that monthly payment is going to be. So sometimes, even just a quarter of a point tick up in interest rate makes more of an impact than, 10, 20, $25,000 in purchase price. So you want to kind of play with those numbers. And I don't think that interest rates are going to be skyrocketing anytime soon. Our economy just really can't support that. But the sooner you can get in, I think the better. Um, Interest rate affects the principal and interest portion of your payment. So we'll kind of just gloss over the different parts of the monthly payment that you would make. So principal and interest goes to paying back the loan. That rate on a 30-year fixed is going to be the same every single month for 360 months. Um, More will go towards principal than towards interest than the month before. So as you are progressing through your loan, you're paying it off faster and faster. Property taxes are also included in your monthly payment. That pays the county and state and schools and all that. Homeowners insurance, flood insurance, theft insurance, and then mortgage insurance in certain circumstances when you're putting less than 20% down. So those are kind of the factors that go into that total monthly payment. But in terms of the rate that you're getting, aside from the influences that the market has, credit score is really the big one. And a lot of times I'll meet with people and talk with people, and we pull up credit, and there are really simple fixes that they can do. And I give them that advice or ideas to try. And then in a couple of months, their credit scores are higher, they have more savings, and it's a shorter process than they had originally anticipated.
Well, that's good to hear that if someone has a ding on their credit score or something that can be changed and just allowing it to happen. I mean, I was under the impression it would take a really long period of time for that to actually reflect on your credit score. So it's good to hear that because the credit score, so I'm understanding that the credit score is really impacting what the interest rate is actually going to be on that loan. Is that right?
It does, yeah, it impacts that. There are certain circumstances where it's easier to bring up credit scores. Ideally, you make your payment every single month on every single debt that you have. You pay parking tickets, you don't let cell phone bills go to collections, you don't let medical stuff go to collections. Just be really on top of that. And then there are other things that you can do to keep your credit score as robust as possible. So one of those things is if you have a credit card that has a $10,000 balance, ideally you want to not ever be holding a balance more than say 2,500 or $3,000. That doesn't mean you can't charge that amount to the credit card, but if you have a big purchase like that, ideally you'll pay it off, and that just keeps credit scores healthy. The most important thing, though, making your payments on time.
I like it. Those little goals, they amount to something much bigger and that's attainable. I like that. I mean, the fact that you even just like threw a number out there to make it like a healthy number that's not going to be super overwhelming. That's also not going to red flag us or pigeonhole us into a certain situation that we can't get out of. Okay. So I also really love that you explained the cost of a home to the ratio of our interest rate, because I think sometimes people, they look at the value or the cost of a home. They're like, "Oh, well this house was $500,000 and so this is what my payment's going to be." And they don't factor in the interest rate and how that can impact it. And then they worry about, well, I just need to get it down to like four. If I can just get that home for 450, then my payment will be even less. But what you're saying is that if you actually worry more about that interest rate getting lower and not so much about the cost of the home, that will impact a little bit more the actual final payment.
Absolutely. Yeah, the interest rate plays a huge role in it. And again, the higher your credit score, the better the rate is going to be. And so, therefore, the more affordable and attainable this home is. And when you're, messing around on Zillow and Redfin, the numbers on the home, the purchase price can look really huge sometimes. A $500,000, that's a lot of money. However, that doesn't mean that doesn't necessarily mean that that payment is going to be unaffordable to you. And again, if you're investing in yourself, in your own retirement, your own portfolio, that can be a smart debt to carry.
All right, I love this. We're kind of like creating this whole nest egg here, like understanding what goes into getting that pre-approval, what goes into, getting that your interest rate lower, surrounding yourselves by the professionals, doing a little bit of homework, realistically looking at what you can afford per month. So what exactly is, and this is actually something I was messaging to you, like what is a purpose of an appraisal and how does it impact the loan amount?
Yeah, great question. So there's so many different things that happen when you go into contract on a home. So you've already been pre-approved, you found your lender, you found your realtor, you go out, you make an offer on a home, and then all of a sudden you're buying a home, and it's going to all start happening really quickly. So the first thing that happens is you do an inspection on the home, and that is between you and your realtor and the inspector. They're looking for things like, oh, this faucet doesn't work, or there's a little bit of mold here that you'll need to have the sellers take care of. That's super important, just to make sure you kind of know the type of home and perhaps maintenance that you're going to have to do on a home. The appraisal is something that's completely different, and it's really only for the lender. So we hand the purchase contract to an appraiser and say, okay, what's this home worth? Well, really, I mean, a home is worth what somebody's willing to pay for it, right? You made an offer on this home, and so you're willing to pay it. So that technically should be the market value of it. There are some times in certain circumstances where the market is really crazy and maybe there's a bidding frenzy or something like that, where that appraisal will really come into play. Because if you're paying $500,000 for a home, but the appraiser says, well, compared to the other homes in this neighborhood, it's actually really only worth 450, then you may need to either go back to the table with the seller and say, we got to negotiate this, or maybe you put a little bit higher of a down payment. Typically, though, I mean, that is when a home appraises for less than the purchase price, gosh, less than 1% of the time, I would say. And oftentimes now, we don't even have to do an appraisal. So it's just like a desktop automated underwriting for the appraisal, and just kind of one step that you don't even have to worry about.
I know I've been seeing or hearing more and more of that with people just waiving appraisals and stuff like that. And I'm like, oh gosh, is that scary or not? And so it sounds like it's becoming more and more common because there's a little bit more homework that's going on the back end. And so that's cool. That's good to know that because that was something that I didn't really know about. All I knew is that when I was purchasing a home, that we were needing to get the house appraised. And that was just like, okay, that's just what we're doing. And it's so funny how and it just goes to show that when you trust the professional to do what they're doing, it's funny how you don't really need to know the nuances of it as long as you trust that person to do things the way that they know it needs to be done. I mean, the same thing goes for us as the professional hairstylist or salon owner. We know what's best. We know how to get this person from A to B and so that they can relax and enjoy themselves and they don't have to worry like are they doing this correctly? Should and you know how it is when somebody asks you a million questions when you're doing what you do. It's fine to answer and tell them and educate them, but it's also okay if they don't and they trust us to get them there. That's part of the process. So, in closing, do you have any final thoughts that you want to share with us when it comes to this big looming scary thing when it comes to getting that home loan that you want to share with our audience today?
I think just start the conversation, educate yourself, find yourself a lender who will walk you through that process. And to your point, a good lender shouldn't expect their clients to be an expert in this mortgage process. If they are first time home buyers, especially, but even if you own 10 homes, it's not what our clients do day in, day out. That's what we do day in, day out. And we need to be good at walking our clients through from start to finish and making sure that clients know what the path forward is going to look like. How many steps are there? What do I need to do? Am I holding the process back? Um, are you waiting on me for anything? Can I go out and shop for homes? So, just finding somebody who has the same communication style with you, who's a good teacher, who's a good listener, um, and who can really efficiently and professionally guide that process forward.
That's wonderful, great advice. So heard it, guys. I mean, I don't know exactly how this process works. Is it state by state with you being licensed in Oregon, or have you actually helped people with the process on the other side of the country, for example? How does that work, Katie?
Yeah, so I work for a bank. I work for Umpqua Bank, so I can lend in any state west of the Rockies. Some brokers or correspondent lenders, they may be licensed state by state, and then there are some banks where they lend across the country, every single state. So it just really depends, but yeah, if you'll want to make sure that the person that you're talking to has the ability to lend in the state that you want to buy in.
What a valid point. And I love that title. Like I would be walking around telling everyone I can lend to anyone west of the Rockies. Like that just sounds so fancy. I like that. So where can everyone go to find more from you and how can people get a hold of you, Katie, if they want to start this process today?
Yeah, I mean, I would love to have that conversation with anyone who just wants to start that. Email is probably best. So I don't know if you want me to give that now, but it's just katiehamm at umpquabank.com. I text, call, email, whatever. However you want to get in touch with me is great by me.
And all of this will be in the show notes as well, guys. So all you have to do is just tap on it and you can start messaging right away. Thank you so much again, Katie, for hanging out with us and sharing your wealth of knowledge. This was hugely valuable today. And guys, make sure you hang out with us next week because we're going to be going into the business side with the salon on how education builds business. So we'll see you again next week with more information on that. And thank you so much for joining us, guys. Enjoy your day.